Hello everyone. February is over. There's a lot of up and down in the market in the last one month. And today is 1st of March. So it will be a good time to do a monthly analysis of each of the sector indices to give us an idea of which sectors do we need to pay attention to during this month. We'll begin with Nifty. So if you see, I will remove all the markings. We'll do a fresh analysis of Nifty. We'll also remove the RSI. For naked chart, I will also remove the moving average is also removed. Now let us look at Nifty as a pure open chart. So in the last few months, Nifty has been going down in a channel, and it's an interesting channel because if you see this, there was one channel here. It was not exactly a full channel, but it was a kind of a channel. There was a channel here. It went up, down, took support at this channel, went up again, created another channel here, then came down again, and is going up again from here. So, what is crucial is this trend line. Trend line is very, very crucial. Unless Nifty breaks this trend line, we will not have a reason to go long for the long term. This is a daily chart. Let us look at the monthly chart. Now, here you will see, if you look at the monthly chart, a very clear flag formation is happening. So, so it is creating a flag. So I will be bullish on Nifty only when this flag pattern is broken. That is, only when it crosses above this previous high. So only when Nifty crosses about 18365, I will think of going long for the long term. So for the more conservative people, you may look at this one. So only when Nifty crosses above this 18650, you may want to start thinking about a long-term kind of bullish sentiment. Till then, Nifty seems to be creating a flag. So there are ups and downs. What is very important is it has bounced off from a very, or almost bounced off from a very important demand zone here. Look at it, there's a demand zone. These two candles are forming a demand zone, and it has bounced almost from there, but from this line. So it is likely that it may go and touch this upper line and then come down, or it may break and go up. So wait and watch. We cannot predict anything on Nifty, but considering it has almost bounced from a very strong monthly demand zone, there is a very good likelihood that it may break above that channel and resume its upward journey. It's a wait and watch. Going to the next chart, Nifty Auto. So Nifty Auto Index has broken out of a triangle. If you see, it has broken out of a triangle. It has also broken out of a supply zone, a monthly supply zone, and which was a very strong supply zone. If you see, after this supply zone, the price went down like anything. Now it has broken above it and it is testing the support here. So if this tests positively, that is, if from this triangle pattern there was also a strong, if it goes up and if it crosses above this level, if it goes above this level, last closing of this candle, 11855, I will be very inclined to go long on auto stocks. And this is only a monthly analysis. I am not doing it at a stock level, but these are levels to watch. So the moment it crosses above 11855, I will start looking at stocks that are breaking resistance zones and going up. Let us look at Nifty Bank, people's favorite. Again, a monthly chart, longer term trend is up, clearly up. Currently, it is forming a consolidation again, something like a flag, not really a flag unless it extends a little bit, but again, some kind of consolidation. It has bounced off from this monthly demand zone here. So, cannot really say anything. If you one can say that it is forming a triangle. So if it breaks above this triangle, there is a big upside. If it falls below this triangle, then it may come down to as low as this 25213. Very, very unlikely, but yes, a distant possibility. Before that, it will find support. It will find support at some places. That is, it will find the support here around this level, or maybe around this level, previous top. So it will find some supports here. It's not like there will be a vertical fall, but chances of a downfall are much less than the chance of an upward breakout. Let us see RSI. Let us see what RSI tells us. Relative Strength Index. It's above 50 and it's down a little bit. So it may come down, take support at 50 and then go up. You never know. It's good to wait and watch. But there's a possibility it may come down a little bit and above. It could be a false breakout from this triangle also and then go up. It's a wait and watch. But the moment it breaks above this triangle, about this level, we'll be inclined to look at banking stocks that are also breaking out from their monthly zones, resistance zones. And then I will buy those for the really long term, for a few next few months or maybe next few years also. Because a breakout from this triangle will be very, very powerful. Could be even doubling the value of those stocks in the next few years. At that time, if this is also crossing above 60, so currently it is a little less than 60, but if it crosses above 60 and shows an increasing momentum, that will be an additional confirmation for me to buy banking stocks. What it is index? Monthly chart, very strong uptrend. It broke out of this channel, this sideways channel. You look at this, there was this channel. It broke out of this channel. Look at the way it went up. Now it is consolidating a bit. After this consolidation is over, and again, a big up move. Right now, again in consolidation mode, potentially a triangle. Let us look at whether it is forming a triangle. Two resistances, three supports. Yes, it is forming a triangle. It is also in the high momentum zone, but it's also cooling down a bit. So it may come down a little and bounce off from 60 levels of RSI. If it breaks above, needless to say, if it breaks above this triangle, there could be a very big up move from here. If it breaks down from the triangle, I can see a support somewhere here or here, or worst case here, because there is a previous top. So this could be a very strong support area. Unlikely to come down, but if, for example, RSI cools up and it goes down, there could be a sideways consolidation, or it may fall down because of all these news about the war and other things. It may fall down. Some election results are also likely to happen in the next few months. So it may fall down, touch this level or this level, and then start resume its journey upwards. Consumption will go very fast on this. Again, Nifty consumption, I had been marking various supports here. It is coming close to this support level. Support area, actually, week to week, it has already tested the support area, very close to testing. So, expecting the consumption index also to bounce from here. If it doesn't, then it may come down to this level here. So, it may bounce from here. it is quite possible that because of all the negativity, it falls a bit more than what is expected, because RSI is also cooling off. It may go down to 50, index goes down to around these levels and then bounces from here. So it's a wait and watch again. Most indices, as you will see, are either sideways or in the consolidation mode, or some of them are forming triangles. This is forming a flag. If you see this upper line and lower line, it's forming a flag. CPSE, Nifty CPSE at an interesting level as against the other indices. It has already broken the monthly supply zone with a strong positive candle. They tried to bring it down below. You can see that it came down here. Again, from here, it took support from the rocket-like formation, a hammer-like formation. And if it breaks above this level, or for the more conservative people, this level, it is likely to go up big time, because then this resistance, that resistance zone that we are seeing, is a very important resistance zone. And it has resisted from here, came after breaking out of this monthly supply zone, it came down. Again, it is bouncing, it is dashing against this. So if it enters this zone, it will be a signal that it may be looking for a breakout. What may happen is, because this RSI is very high right now, it may go up, dash around this, take some resistance around this level, come down again, take support here, and then go up and break this resistance zone. That is quite possible. Let us wait and watch. But this is a likelihood. It may come down from here. It can also be seen as a hanging man. So it may come down from here because of market sentiment. It takes support at the monthly demand zone here and then break out. Let us see what happens. So we have done Nifty CPSE. We'll look at Nifty Energy. Nifty Energy on a monthly chart is very sideways. Cannot predict anything right now. Momentum is above 70 in the overbought zone, but again, it may continue upwards also, because the line is very, very, very stable going up, not a very steep up line or a very steep curve. So it may bounce from here and go up. I will consider it sideways. So if you see, these are the binding forces. Here we have a resistance, and here we have a support of sorts. So if it breaks above this level, 25379, I will start looking at energy stocks. And again, I will not buy all energy stocks as a basket. I will look at them one by one, look at which ones are breaking out, and accordingly I will take buy decisions. But one should also remember that when you are looking at monthly charts, when a breakout happens, it is a huge thing. It's a huge, huge movement. And again, that breakout will have to be confirmed. So when you are looking at the monthly charts, you will have to look at where the monthly candle is closing. We have to wait till 31st March. So for example, in March, there is a new candle that starts, goes up and closes somewhere above this line. It will give me a confirmation that in the first week of April, I want to start looking at other stocks in this sector, in the energy sector, that have done similar things, have shown bullishness, and then go out and buy it. Financial services, monthly chart. Let us close RSI for now. Again, a strong uptrend similar to BFSI, creating a flag, taking support from this demand zone here. So it is unlikely to fall below this. Most likely it will be this flag and go up. I'm sure you will be able to identify this flag. Most people will be able to identify this flag, but I will just show it to you once. So look at this. It has formed a flag kind of thing, taken support here at this demand zone, and gone up. So it is likely to break this flag very soon and go up. However, like I said before, it's a monthly chart. So we have to wait till end of March to see whether the candle that breaks this closes above this. Otherwise, if it may happen that it may go up during the month and come down again and close somewhere below also. In that case, it will not be a valid breakout. So for a valid breakout, please wait and watch. In February, I have not seen any candle that has broken above and closed above in February. So unless we see that again, Nifty Auto also the same thing, it has gone down again. The bank, commodities, consumption, given a confirmation in February of a breakout. Energy in a way may have because it has closed above, but not yet above this. So I will not consider it a confirmation. For financial services, let us look at the FMCG index, which is a defensive sector. Again, FMCG index has broken this support level, broken this demand zone a little bit, but took support. So it has not closed below this line, the lower line. I will not consider it as a violated zone. It is still valid. It may take support from here and up, but yes, it is a cause of concern. What we saw here, it was forming a kind of triangle, broke above it, came down to support here. It's quite likely that if sentiment is wrong, if sentiment is negative, bad, it will come down and this line, this support line, and then go up. Not a reason to be bullish on FMCG as well right now. Growth sectors 15 index. Interesting situation. On the monthly chart, this is the previous top. Market index went up, broke above this very convincingly. A new high, came down, and it is now taking support at this previous high. So another demand zone. You see here, this is the proximal line, this is the distal line. There is a demand zone here. It has taken support exactly from this demand zone. So it is unlikely to fall further given technical analysis principles. But again, we cannot predict anything with 100% probability. Market gives surprises sometimes. So let us wait and watch in the month of March whether it gives a positive candle, and if it closes above this level, at least above this level, it will give me above 7706, that is 7710, and more conservative people above this level. Closes above this level, 7850, I will have a greater conviction to look at growth sector stocks, to buy them for the long term based on the individual stock patterns. But then if it closes above this in March, I will start looking at growth sector stocks and individually analyze those stocks. Let us look at what infrastructure is doing. Probably infrastructure could be the strongest. Let us see. Infrastructure has gone up very, very, very sharply, extremely sharply. It created a consolidation here, broke up, took support, went up strongly. Again, it has come down to test this demand zone. So, infrastructure in support, there is a very strong bearish candle. So, let us see what it does in March. If the March candle closes above this consolidation, especially above this level, the previous high, then I will be inclined to buy. I will be inclined to look at infra stocks individually and look for long-term buys, long-term buy opportunities. Nifty IT, I am yet to find any sector that has given me strong bullish reasons to buy. Nifty IT is a cause of concern to me right now. Look at what it has done. Previous top here. Previous top is very far away from current price. The strong demand zone is also here, even if you take the most conservative ones here, support level. So there is a demand zone here. It is also very far away from the current price. Candle formation is almost like engulfing a very, very, very strong negative pressure. Let us look at the RSI. RSI has also shown a very, very, very sharp drop. So I am a little concerned about the IT sector. An immediate support may lie here because this is kind of a demand zone, not a very strong demand zone, but yes, kind of demand zone. Price is very, very likely to come to 30842. bounce or maybe even come down to the lower level, that is 27568 level, 27570 levels. I will not be surprised if price comes here, given the current situation. And whenever the rise is very steep, the fall is also likely to be equally, the correction is also likely to be equally steep. So look at this trend line, it has already been violated. Let us look at the Fibonacci also, for those who like Fibonacci. Retracement line. So the rise started from here. So let's take this Fibonacci. So rise started from here, went to this high. So it has come to 23.6. And if you look at it, 50% coincides with this level that I talked about, the demand zone here. So I will not be surprised if it comes down to 25250 or 25200 also. Quite possible. So if you are holding any IT stocks, you may want to look at them individually also, because they may rise because of their individual strength also. But be very careful about your IT stocks. If you see any reason for the stock to go down, immediately book profits, book losses, but get out, because it will be a long time before the stocks rise up and cross above this level. So be very cautious about IT stocks. Media. Nifty Media has broken monthly supply zone that I talked about here in my earlier session. It has broken above this very convincingly, came down testing support. It is also very close to 50 level. So I am bullish. In a way, I have a reason to be bullish on media stocks. They have also tested the supply zone here and come down. They are testing this demand zone. So it is very likely that the price will shoot up from here, and the immediate target will be somewhere here. So accordingly, if you look at media stocks, you may want to see whether any media stocks are giving any positive candle patterns, maybe some bullish engulfment pattern or some hammer pattern, or some patterns where you are seeing a reason to buy, and then look at buying those. So media is a sector to look for. Metal sector. Again, I have got Hindalco a few weeks back, and Hindalco, despite all this super fall in the market in the last few days, Hindalco is up almost 7%. I'll show you what is happening in Hindalco. Look at what has happened to Hindalco in the last 1 month. It opened somewhere here, 494, and it is at 73. So if you look at percentage terms, 573 minus 494. What is this? Yeah, 79. So percentage terms, 79 divided by 494, which is where the rise started. So if I invested 494 and earn 79 rupees on that, I have made a very nice 16%, almost 16% profit in 1 month. 16% profit in 1 month, in the time when the entire world is reeling against this entire Ukraine scenario. Everything seems to be down. Hindalco has gone up 16%. And I identified it here because this strong pattern here. And after this bullish pattern, the February candle actually closed like this. So I put buy above this level. My buy was above this level. So in February, it opened below and went up when it crossed for 516. I got around 520 if I'm correct. Got it around 520 and it has gone up very nicely. I'm still holding this because I'm expecting another big run from here. Given this strong candle, given that it has gone down below the overbought region and gone up again, the momentum is also picking up big time. So I will be inclined to buy Hindalco again, one more lot of Hindalco and hold on to it for a long term. Hindalco, according to me, is in for a long run to go up. So let us come back to the Nifty metals sector. Fairly bullish, like I said, went down, came up, tested this momentum, came up. Momentum is building up. Very strong reason to start looking at metal stocks for the long term. So look at metal stocks index, look at individual stocks, and then start looking for reasons to buy. Like I showed you, Hindalco was a very big reason. Again, why did I buy Hindalco? I saw here in the metal stock index, there is a bullish harami here. So after this fall, there was this bullish harami pattern here. And this bullish harami pattern afterwards, I was expecting it to give a big boost here, but in February, it was not very convincing. So I did not really buy anything here. It was also showing a fall here. So I did not buy immediately with this bullish harami. However, because this was the sector. When I looked at the individual stock also, I was not convinced, so I didn't buy. In March, this was in Jan. This is December, Jan. So in February, when it shot up here, it gave me a reason to buy. And when it was shooting up like this, in February month, I was also looking at Hindalco stock at the same time. So when this showed a reason of to be bullish, when it opened above this level, above this previous open, February open was above the January and January close. So it was a reason for me to consider a positive buy, and it gave me a handsome return. I'm still holding Hindalco. I'm also looking at other metal stocks, and I will also consider buying those for the long term. After Hindalco, let us look at the MNC index. MNC is multinational companies. Again, as expected, very sideways movement. Again, forming a flag. Most indexes are forming flags. If you see, there is a flag pattern here as well. So if you look, there is a flag pattern. I will not be inclined to go long on any MNC stocks unless I see a reversal or a breakout from this flag pattern. It is also likely that this flag pattern may break downwards and the price may come all the way down to this demand zone here, test this support and go up. So it may bounce from this upper line or it may even come down to this lower line because here is the previous stop. So not very bullish on MNC because the momentum is also dying down. So some MNC stocks may even start falling. Let us keep watching HUL, let us keep watching Nestle, MNC stocks and see what they are doing. And I'm not bullish on MNC stocks right now. Pharma sector. Pharma sector is at an interesting level. It has broken above the previous top. People may like to call this the COVID top also. I don't know. Pre-COVID. Let us see. So this top happened in April 2015. So it was well before COVID. 2015, it hit a top and it broke out of this top in May 2021. So very long waiting period. If you see, there was this strong here. Do a better channel from here. So when it broke out of this resistance line, look at and this was again a bullish engulfment, almost a bullish engulfment. Very strong breakout, and then you saw what happened. It went up, created a new top, is coming down. The reason I'm a little bullish about this is here there is a strong demand zone. This hammer candle is creating and this inverted hammer. Together they are creating a demand zone and is bouncing from here. So there possibility, and again, this has gone down. RSI has gone down below 60. So there is a possibility it may go down to 50 and then take support and go up. I don't expect pharma to fall anything below this level. We'll start looking at pharma stocks as they fall further for good demand zones around this area. And if there is a bounce for pharma from here in monthly chart, I will also look at bounce for pharma stocks on the monthly chart. And then on the weekly and daily charts, I will start taking the buy decisions. Two indices left, Nifty private banks. Again, a sideways movement, nothing to write home about. Wait and watch. Nifty PSE, public sector enterprises. Again, a very sideways movement. There is a previous top. It couldn't sustain above the previous top. It gave resistance and came down. So there is no reason for me to consider buying public sector stocks. Again, if you see here also, RSI is not giving any reason to consider buying any PSE stocks. One positive thing is, of course, it is showing this demand zone, monthly demand zone. So it is quite possible that it may take support here. So if you look at it, there is a monthly demand zone here, it has taken support. So it may take support here, keep moving sideways for a while, let the RSI cool off a little bit, and then it may bounce. But I will not look at long-term buy of any public sector stocks unless the candle, March, April, May, whatever candle it takes from here, unless it closes above this high. So if the PSE stock index closes above 4513 to be close, maybe 4520 in any month, that is when I will look at buying any PSE stocks. Till then, I'm very, very conservative on PSE stocks. Let us look at public sector banking stocks. Public sector banking stocks are reacting to this supply zone. You see here, there is a supply zone here. From here, the prices fell very strongly. They are taking resistance here, and they are creating a sideways movement. There is also a small demand zone here, which is not as powerful as this supply zone. So it is very likely that prices may also break down from this trend line. There is this trend line here. So it is quite possible the prices may fall from here, come down to somewhere here, and then go up. Because there is a demand zone, a fresh demand zone here. Not really fresh, it is tested if you look at week to week. Really untested demand zone is here actually. So let us see. Can't really say how far it will fall, but as of now, I'm definitely not bullish on any public sector banks like SBI. Nifty Reality Index, let us check. Again, Nifty Reality is creating. You will see many indices showing this pattern. The flag pattern very close to a strong demand zone, monthly demand zone. Week already reacted. We yet to react. I don't see a big downside on reality, but I also will not be convinced to buy unless I see very convincing bullish pattern here, because it's a long way to go. RSI also here, from here to 50, it's a long way to fall. So it may move sideways, it may fall down further, it may even test this channel. We never know. But I'm definitely not bullish on reality index. And the last index is service sector. Again, service sector similar to other indices, sideways movement close to this demand zone, these two candles if you see. So again, RSI is cooling down, so it may continue. Service sector may also continue to see sideways movement for some time, and at some point when momentum picks up, it may break above. So I will not be bullish on service sector stocks unless there is a convincing close above this level, 25850. So that was my analysis of individual indices in Nifty. And if you see, out of all of these, it was only the metal sector where I found there was some reason to look for strong buys. And media sector may also be uh, another sector where we can look at potential long-term buys. I hope you like this analysis. You found it useful for your buying decisions. Again, before I close this, let me say this is not an investment advisory. I am not a certified investment advisor. I am sharing this analysis for learning purpose only. If you agree with what I say in this analysis, please write that in the comments. If you disagree with some of the analysis, please share that as well, because I will also learn from that. But please, please, please don't take any investment decisions based on this analysis. Please consult your qualified investment advisor or do your own analysis before you make any investment decisions. I don't take any responsibility for any losses you make based on trading done because of this analysis. I also don't take any credits for any profits you make because of this analysis. This is purely for learning purpose. I hope you like this video. You will find it useful. If you like it, please like it on YouTube, and please feel free to share it with your friends and relatives who may also benefit from it. And if you want to see further such videos going forward, please subscribe to my channel. Thank you very much.